There's also the VIX trying to break to a new low. Scott Bauer is here to talk about it with us. Pretty interesting, Scott. VIX down at 17 here. Market kind of seeming like it's a little sluggish, but it certainly is not selling off. VIX looks like it's going its own way.
It's absolutely crazy, Oliver. Crazy that VIX is this low, and that you're seeing VIX at 17 or sub 17. You're seeing implied vol in ES options on the future side as low as they've been since January of 2022. In fact, at 13% at the money. You're seeing vol Q, which is vol in the NASDAQ, the lowest it's been, in over a year. So what is this telling us? It's, to me, telling me there is way too much complacency in this marketplace. Okay. Yes, I was buying VIX at the 18 level, which was the prior, it was the, prior support there. It is just too low in my opinion. So what I am doing here is I'm trying to buy time. I'm trying to buy, time spreads in whatever asset class it is, whether it's options in an individual stock, whether it is in, the ES. I think you've got to take advantage of this cheap volatility. And you know what? Taking advantage, Oliver, doesn't mean just taking advantage as protection to the downside. It can be also protection to the upside for if we get that breakout to 4,200 or beyond. So I'm not just talking about portfolio protection to the downside, but when you see vol this cheap, man, jump on it.
And you mentioned that you're looking at what time on the calendar for, I guess the inference you're making generally would be to the downside for puts, for single stocks that you want to fade, or the broad market.
You can do the same. Yeah, you can do the same with calls too, though, because volatility is so cheap. Okay. You got to remember, especially when trading options, time is premium. So when volatility, which is the biggest contributor to option premium that there is, when volatility is at bare bones levels, okay, that makes time cheap. That makes time, it puts it on sale, if you will. So I can buy, whether it's 2 weeks, 4 weeks, 6 months of time in an option, sell some other options against it that has, closer dated expirations. And if vol expands, I'm a winner. So I'm basically buying time on the cheap. And in an environment like this, that is absolutely my go-to.
Seems like we're probably going to be looking back on this in a month or so on one of those total options volumes, open interest charts, and going to see a pretty big spike would be my guess.
I would think so. And all that's going to take is one report or one geopolitical event or something coming out of the government, or, there's what, a dozen, 20 things on the table right now where any one of them could make the VIX. And I'm going to say spike, but I mean, even go back to 20, which wouldn't be spiking, right? So that can happen in a heartbeat. And if you look at the VIX futures curve right now, if you go out just a couple months, the VIX futures are trading in the 22, 23 range.
Like it. All right. Interesting. Good stuff, Scott. Appreciate the heads up.
Thanks,
VIX
Oliver.
really trying to break down in a big way. Sub 17. Amazing stuff. Haven't seen it in a while.